Right, final part of the stage analysis members weekend video. So made a little mistake there. I clicked the pause button and to some mouse problems, and then accidentally clicked the stop button. So had to break it up into a third part. It's not really sure how to stitch them back together at the moment in Vimeo, so I'm not sure how you do that. So I'll just do it as another part. So apologies. Okay, now on to the most important part of the weekend video. So I posted this yesterday, the market breadth percentage of stocks above their 50-day, 150-day and 200-day moving averages chart combined. So this, as well as obviously the rest of the market breadth charts, are what I consider the key to successfully trading the stage analysis method. If you don't use the market breadth, then you're gonna struggle. It's and you need to understand it. You need to really get into it. It's very, very important. Basically, it gives you the state of the market. It helps you with your strategy and it helps you with your positioning. So, and when to be aggressive and when to be defensive, etc. So it's very, very important. And I find the percentage of stocks above their 50-day, 150-day and 200-day moving averages chart, the moving average breadth as we call it, to be one of the key aspects of that, obviously, along with the rest of the market breadth charts, which obviously encompasses our entire weight of evidence. So but this is my favorite chart, and this is the one I use for the strategy type stuff, which I post each weekend. So we look here, we can see those members will know when it's below this red 50-day moving average line, we're in a difficult environment. When it's above it, we're in a potential positive environment. So you can see this week we moved back above that 30% level out of the lower zone, which we've been in for a lot of this year. We're still below the 40% level, so we're still in the stage 4 zone, but we moved above the 50-day moving average and out of the lower zone. So although we're still in a potential stage 4 environment, as we're below the 40% level, we're above that. So I give it a tentative positive environment in the stage 4 zone rating. So each week, as I said, I do a rating for this, where it's either a difficult environment, a neutral difficult environment, etc., and what zone it's in, whether it's in stage 4, stage 1, stage 2, etc. So, and then a little bit of commentary with each post. So at the moment, you can see we had a plus 14.68% gain on the week, which is very strong. So moved us back above the 50-day moving average. As I said, is the key signal line for this, which happened on Tuesday. So we look down into the data, you'll see this actually. So we've got the percent above the 20-day MA and the percent above the 50-day MA in these final two columns here. So you can see when both of these are positive, that's when we're potentially in a positive environment and when we want to get involved on the long side again. So potentially using progressive exposure, for example. You don't have to, obviously not suggesting you dive in, but obviously everything in sensible moderation. And when they're on a negative, that's when you're either sitting in cash or when you're obviously short in the market. So at the moment here, if we look at the point and figure chart, this also moved to a bull confirmed status this week. So I talked about it on last week's one that it needed to move above that 26% level to move to bull confirmed, which it did on Tuesday, I believe, again. So and it's moved up 6 boxes this week. So a really strong move on the week. So from what's considered the strongest area on the chart, so we get a bull confirmed signal from the lower zone, moves up through that 30% level. This is considered the strongest part of the chart in order to get that signal. Could still fail. Obviously, we've seen other ones fail, but it is obviously a strong area as you've got the entire, obviously, playing field to move up towards the top of the range again. So as we saw back in January, February this year and March, when they were above the 70% level, we started to come back below the 70% level in March here. So obviously the double bottom breakdown in February. So this was in 2021. So that was the top that you looked for. So at the moment we're doing the opposite of that. We've had the bull confirm signal here and we've moved back up and out. So we're on bull confirm status on this chart now, so on the point and figure chart. So and we're on a potential positive environment on the line chart. So this is only one part of the weight of evidence approach. So this is only one form of breadth. So we don't use this for everything. So the fact that this and other short-term indicators, this is a more long-term indicator, but the fact that this and some of the short-term indicators are also on a positive has moved back the status on the short term towards a positive kind of status. So whereas the long-term status at the moment, which you know from the market bar, I've moved to a neutral, as you'll see from the other market breadth charts. Not all of them are yet in a positive kind of environment. Some of them are still on negative signals, your new high, new lows, your advanced decline lines, etc. So we're trying to get a sort of sample of what's going on across the board. So, but from a moving average breadth perspective, we're on bull confirmed on the point and figure, and we're on a tentative positive environment. So the strategy that I post each week is my strategy. Again, not suggesting you use it. This is only for educational purposes only. So it's just how I am approaching it based on position. So again, tentative positive environment with a point and figure in a column of X's in the lower middle zone, which means on an offensive posture, we're in bull confirmed status on the point and figure chart. I'm using progressive exposure potentially to start adding some long exposure and test the market still. So we've had a few weeks testing alongside again. ETFs is one way you can do it. You can obviously use index ETFs to get back into the market more quickly. It's obviously isn't setups there, and then you can start to trim off the ETFs once you start to see setups happening in individual stocks that you obviously can potentially go for. But you can focus on stocks with strong technical attributes. We want to see those A+ characteristics. At this point, you can obviously now start attacking breakouts once more. You've got earnings gap, significant bars. So whereas before, when we were in a more difficult environment, it was much more about constructive pullbacks, consolidations, springs, and tight action in bases, etc. So we've now got a much broader kind of aspects, and you can probably tackle more breakouts at this point if they're showing obviously good characteristics. And you can also at this point in the market look for those bottom fishing plays, those stage 4 B- type stocks. So this is a different aspect to the method, that when you're in stage 4 and potentially moving into stage 1, that you're going to get some of those bottom fishing type stocks that have had deep stage 4 declines and might potentially be moving back towards stage 1 type behavior with that change of behavior. So you might be starting to form a range, and obviously those stage 1 ranges can be anything. So they can be up to 100% at times. So there's lots of opportunity for swing trading within stage 1 ranges. So there's lots of other sort of aspects in this. So, and then at the end, I always do a little bit of a sign-off commentary. So further change in strategy this week with the point and figure chart moving back to bull confirmed status and the line chart moving back above its key 50-day moving average into more positive territory. But it's not out of the stage 4 zone as yet. It's still below 40%. So the posture continues to be on offense for another week, but still with a cautious approach, as the environment change is still only a tentative one and requires further confirmation in the coming weeks. So as in previous posts, proceeding with caution via progressive exposure. So let's have a look at a different aspect of this, just looking at the longer term. So one way you can do this, if you've only got one chart, for example, you've only got the NASDAQ or the NYSE to look at, you can add a moving average to this. So this is the 10 and 30 week moving average on the 200-day, the percentage of stocks above their 200-day moving averages chart in the NASDAQ. So you can see since the 30 week moving average here, when it starts to break that back down below that in March 2021, it's held below that level all the way through into July. So it was on a negative status all the way through into that point. You can see since July, we've seen a change of behavior. We've been mostly above that 30-week moving average, had a dip back below it again, but we've been back above it again. So we're looking for this to make a continuation breakout. That would be a strong, obviously, signal in this one. But at the moment, you can see there's clearly a change of behavior going on down here compared to what we've seen over the last year. So as I said, when this is below this 30-week moving average here, then it's obviously on a negative signal, and when it's above, it's on a more positive signal. So you can do this for the NYSE as well. So it's another way that you can look at it. If we look at the individual charts, as I just showed you a little bit before, at the moment, we're still not out of the lower zone on the longer term measure, the 200-day moving average one. It's still at 27.23%. But if this starts to push up through that 30% level as well, we've got the 150 days already pushing up and the short term is pushing up, then that would be obviously a strong signal on the NASDAQ there. Same with the NYSE, just pushing at the 30% level at the moment, so we can see some continuation in those, then that would be a strong signal there as well. So the combined of all of those is why we're potentially moving towards a positive environment at the moment. Again, could still fail, could fall back down again, but at the moment, playing the odds is obviously what we're doing. So we're looking for it starting to move towards positive, and that's all we can really say about it.